You are listening to chartingwealth.com for Tuesday, the 31st of July, 2018. Everything down for the day on Monday. Stocks, bonds, and gold. Let's jump first into the S&P 500. What do we see going on here? Well, so far, the first day of this latest week, we see prices opening, actually breaking through the 2-day and the weekly trend line, moving down. Now we have a red open box candle. It's not a strong red down candle, but it does show considerable weakness starting the week out. Derivative oscillators losing a bit of momentum. Price percent oscillators gone pretty much flat. That is on the weekly chart. Now again, caveat, this is only the first day of a 5-day candle, but we nonetheless will pay attention to where things opened up and where they are moving on that first day. We look at the 2-day chart. It tells us some other things. Looks like the market peaked out back on the 2-day candle ending on Wednesday, the 25th of July. We saw a spinning top for the 2-day candle ending the 27th, and so far we see that we have a red, solid red down candle pushing through the 2-day trend line. Now again, the last candle that completed was on Friday. This is only the first day of the latest 2-day candle. It will end on the last day of the month. That is tomorrow, the 31st, Tuesday, the 31st of July. So we'll continue to watch and see how this candle plays out. Derivative oscillator losing momentum. Price percent oscillator heading down. Now still, there is no crossover, so both our 2-day and our weekly chart are still in confirmed up moves. We see on the 4-hour chart strong down movement in the morning and the afternoon, following strong down movement in the afternoon on Friday. We actually had in the afternoon on Friday the 4-hour chart crossover going down. How long will this down movement go? We don't know, but so far we have strong down movement in 3 strong red down candles. Derivative oscillator gaining lots of momentum. Price percent oscillator heading down also. Now, if there's enough movement to reverse the 2-day trend line, that would take us out of a potential up trade for a while. But if things recover on Tuesday or Wednesday or even Thursday and rotate back over going up on the 4-hour chart, we might very well want to jump in and play on that. But we do see that things have crossed over. Again, going down pretty strong on this 4-hour chart. We'll just see how long that goes on. That's where we are as far as the S&P 500 goes. We go from that back to the weekly chart and to QQQ. That is the NASDAQ 100. It peaked out also back on the week on ending the 20th of July. That seems to be, well, I take that back. Actually peaked out on the week ending the 27th. This last week we actually had a higher result as far as the red line went on this red spinning top in the prior week. And of course we started this week off not with a red open box candle, but with a strong down candle, solid red, and it looks like we're getting close to a crossing over. Now we can't call that until the end of the week, and it could bounce off that, but down 1.41% on Monday. Derivative oscillator losing momentum. Price percent oscillator headed decidedly down. We look at that 2-day chart. What do we see? Well, we had a red down candle back on Friday, the 2-day candle pushing through the 2-day trend line and then through the weekly trend line on Monday, crossing going down Monday with that 2-day candle. Now again, that's just the first day of the latest 2-day candle, so we don't call it a crossing over yet. On the price percent oscillator, that will only occur if it indeed continues, unless there's a strong up day on Tuesday. Then of course we would call it at the end of the day on Tuesday when the market closes. But looks like things are decidedly down on QQQ, which is of course the NASDAQ 100. So we've got the derivative oscillators not just gone flat, but it looks like it's crossed over going down on the red. That is the derivative oscillator. Price percent oscillators trying to do the same. So we'll keep our eye on things, see how it pans out when it finishes up on Tuesday. And of course, 3 strong down candles, all about the same size, heading down from Friday afternoon, Monday morning, Monday afternoon, with the crossover going down all the way back on Thursday afternoon. On the price percent oscillator, derivative oscillator continuing to gain downward momentum. So lots of strong down movement so far on QQQ. We'll continue to keep our eye on things and see just how much strength this down move is going to have, and if it will drop us into the potential of some downward plays on something like QID or one of the inverse funds related to the NASDAQ 100. If you've not already listened to our training, Inverse ETFs, How to Make Money When Markets Crash, I would urge you to do that. You can do that at our YouTube channel and also at our website, chartingwealth.com, under training. That's where we are as far as stocks go, both the NASDAQ 100 and the S&P 500. Like we said, both of them down for the day, a little over half a percent on the S&P and 1.41%, almost 1.5% on the NASDAQ 100. Next, let's go to TLT, that's 20-year bonds. They had been in a confirmed up move and hasn't crossed over going down yet, but we're going into what looks like our third week of strong down movement on that weekly chart, particularly after last week's strong move. Derivative oscillators continued to lose upward momentum since it peaked out back on the week ending the 13th of July. And again, a big red down candle just for Monday as this week starts off on our Heiken Ashi candlestick. And again, price percent oscillator looks like it's moving toward a crossing over going down. Hadn't happened yet, but the derivative oscillator losing lots of momentum too. We go from the weekly to the 2-day. And again, we see, again, strong down movement on the latest 2-day candle. That's just the first day of the latest 2-day candle. Derivative oscillator gaining downward momentum, price percent oscillator heading down. And as we look at that 4-hour chart, what do we see? Well, that 4-hour chart continues to be flat and running down. Now, it had really sort of bottomed out until Monday morning. It had really bottomed out back on the prior Tuesday, the 24th of July, and it slid sideways all throughout the week, but really bottomed out even lower on Monday morning and the 30th, and then up a little bit of recovery in the afternoon. So again, still sticking around that 119.37, something like that, but again, it's starting to trundle lower. The price percent oscillator converted, well, is still running flat. The derivative oscillator actually was trying to go green in the morning, and then with all that downward momentum, converted back over to red in the afternoon. So we'll just continue to keep our eye on things. Now, again, we don't really have a trade on 20-year bonds because the weekly is in a confirmed up move, and the 2-day is in a confirmed down move since it crossed over going down back on the 23rd, Monday the 23rd of July. So we'll just have to continue to watch until we get the weekly and the 2-day sorted out, moving in the same direction. We will not have a trade on 20-year bonds. We'll just continue to watch and see how things shake out. That's where we are as far as bonds go. Again, down for the day 0.34%. Last we go to gold, and of course gold has been in a confirmed down move for many, many weeks. Started moving again down in earnest back on April the 27th, and we're going into 1, 2, 3, 4, 5, 6, 7, 8. Since we saw the 2-day chart rotate over going down back there on the week ending the 15th of July, we've continued to have lots of down moves, only one up move, one up week since that time period, and really only 3 since all the way back in March. Only 3 up weeks. The rest of the time down. This week started off down. Derivative oscillator looks like it's pretty much flat. Price percent oscillator headed down on that weekly chart. 2-day chart, we can see that again, pretty much a sideways slide, tending down. We're still right around where things bottomed out, about 115.80, something like that. We see the derivative oscillator is losing downward momentum. Price percent oscillator sliding sideways. So again, confirmed down moves on the 2-day and the weekly chart. What do we see going on that important 4-hour chart? It's still in its pullback, hasn't crossed over going down yet. May be doing that, and if it does so, it'll give us an opportunity to jump into another down move like we did back on the 13th. through, around the 19th or so, when that down move stopped and things went up a little bit and then sort of sideways. If we have a crossover going down on gold, we're still in the mood because the 2-day and the weekly are both headed down. Once this pullback ends, if indeed it does on the 4-hour chart, with the derivative oscillator losing momentum and the price percent oscillator heading down, that'll give us the opportunity to jump into another inverse move in gold, and we'll see how that plays out if indeed it occurs and gives us that opportunity. And again, I urge you to follow our training on inverse ETFs, how to make money when markets crash. Of course, you could also buy puts in gold in your virtual account and keep up with your success in doing that. But let's see how that plays out and if we actually have that trade. Folks, that's where we are as we end the day on Monday, go into Tuesday, the last day of July, the 31st of July. We love to hear from you. Always feel free to write us, chartingwealth1@gmail.com. And if you've not ordered our book, Charting Your Way to Wealth, you need to do it. We appreciate you. God bless. All the best from the whole team here at Charting Wealth World Headquarters.